Hello, everybody. Welcome back to the podcast today. Welcome back to my YouTube channel. Today, we have a very special guest. Todd O'Donnell is joining us today. He is a well-known figure in the insurance industry here in Southern Ontario. He's the owner of a Desjardins Insurance and Financial Services business, and he has two branches, one location in Cambridge and another one in Guelph. He's been in the insurance business for nearly 20 years, and his office has been recognized as being among the top 5% in Canada. He's a graduate of Wilfrid Laurier University, and he's originally from Mississauga. So welcome, Todd. So nice to have you on board today.
Thanks for having me, Randy. Appreciate it.
No problem. So what do you want to talk about today, man?
We want to
Insurance?
talk about insurance?
Now,
Are we
wait
sure
a
people
minute.
want to hear that?
Wait a minute. Okay, that's a valid point. Okay, most people,
Yeah,
their eyes kind of glaze over.
yeah,
But there's actually a lot of things to talk about if we're talking about real estate. And again,
yeah.
I was looking at your LinkedIn profile and your company business
Mhm.
page, and you guys do a whole lot of stuff. I mean, these are the kind of insurance things that we can talk about: disability insurance, auto insurance, critical illness insurance, life insurance, commercial insurance, health insurance, motorcycle insurance, and homeowners insurance, which is probably the one that we will discuss today. So there's a lot of
For sure.
stuff to talk about. And
Yeah, definitely.
insurance is sort of an integral part of the real estate process, and we're going to get into that in greater detail. But Todd,
Yeah.
for the benefit of the listeners, tell us a little bit about yourself.
Yeah, for sure. Yeah. So yeah, grew up in Mississauga, right in your neck of the woods there in Arundel Village, and
Okay.
also lived downtown. And then we moved out this way, yeah, close to 20 years ago to open up my first office in Cambridge. So I have an office in Cambridge and in Guelph.
Okay.
My wife Tara is also involved with the business. We got two boys, 18 and 20. They're not involved yet. I think they think insurance is a bit boring, but we'll see what happens down the road. And yeah, I've got 12 team members between the two, and outside of having the expertise in insurance, I'm also involved in real estate myself. So it's not just that I know about, say, investment real estate. I own investment real estate, so I have a cottage, office building, single family dwelling, student rental. So I have firsthand experience both, as an insurer, but also as somebody that owns that real estate.
Great. So that's a pretty well-rounded background for sure.
Yeah.
Um, so I was just saying, we were just talking a little bit before we started the recording that I can remember back when I bought my first house many years ago.
Mhm.
I had no idea about insurance at all. We had done an agreement of
Mhm.
purchase and sale. We made the offer, it got accepted.
Yeah.
And then I found out a bunch of things as the process went along. Number one, that when you're buying a house, you've got to have homeowners insurance on that property before the
Yeah.
bank will give you the money. They want to see that
Correct.
they're covered if the house, God forbid, would burn down or something,
Yeah.
that they're going to be covered. So that was the first sort of eye opener for me way back in the early '90s when we bought our first property. And
Mhm.
that kind of opened my eyes. Then I got into the industry later, and I realized there's a lot of all sorts of subtleties as well in the real estate industry because there's a big difference if you're buying a condo versus
Yeah.
a single detached house. Tell us a little bit about maybe that first topic about how the banks do require that you have homeowners insurance on the house
Yeah.
before they're going to release the funds.
So first, I'll tell you, you're not the first person to do that. Where it's a last minute. Oh, geez, I didn't
It
realize I
was.
needed insurance. When you look at
Yeah.
that the real estate process, we're usually always the last ones to get involved. And in some situations, we should be one of the first. But yeah, we are one of the last. And yeah, you're right. The bank will not release money unless they know there's insurance on the home because they want to make sure that if something happens, that they're going to be able to get their money back. So it's typically at the lawyer's office when you sit down, they ask where your insurance is at. But yeah,
Right.
the bank will not. So any type of freehold, like homeowner, sometimes with condos they'll require it as well. It really depends on the bank. But yeah, the check is not going to clear. You're not going to get a check in hand unless there's insurance on the property.
Right, exactly. And that was an eye opener for me. It did get
Yeah,
revealed to me at the lawyers. The agent at that point, I wasn't in the industry, didn't tell
yeah,
us anything. They probably didn't know anything. And
yeah,
it was a big surprise. And then we're scrambling with a few days to closing to get an insurance
sure.
policy in place.
Yeah.
So yeah, that was something definitely. So what should it, let's talk about a first time buyer at first here.
Yeah.
What
Yeah.
should a first time buyer do in that process? Let's say they've made an offer and it got
Yeah.
accepted and they're all excited. They're going to be moving in a couple of months into their
Yeah.
first home, and it's not a condo. It's a freehold, or
Yeah.
it could be it could be a semi detached or what, but it's a freehold
Yeah.
property. What should they
Sure.
do other than call you directly? Uh,
Yeah.
I'm going to put your contact information underneath, no problem.
Yeah. Yeah.
So what
Yeah.
should they do in that process?
Yeah, so great question. Because again, like I said, we're usually one of the last kind of parties to get involved in the process, and it
Yep.
is smart to get your insurer, or if you're a first-time home buyer, find an insurer.
Mhm.
Number one, you want to have options. You don't want to leave it last minute where you're kind of stuck with whoever answered the call and the only one that got back to you on
Yeah,
time. So,
that could be
you
what
want to
happened
give
to me.
yourself lots of time to
Right.
number one, shop around. The
Yep.
other thing too, and I know we're going to touch on this a little bit later, is there may be some things with that property that might be an issue with insurance. So whether it's an issue of actually getting insurance
Yes.
or how it affects premium. So, that's why you want to get your insurance company involved early.
And I'm going to say this to the listeners today that you better all hang in there because we're going to go over the red flags in the insurance industry, what
That's right.
insurers look for, because there absolutely are some things in properties that could make
Yep.
it difficult for you to get insurance. But that's going to be towards the end of the call. So you guys
Yep.
better hang
Yep.
in there. Better hang in there. Okay, so yeah, definitely. Should they call an insurance broker or should they just look it up online? If they're, let's say they're in
Yep.
Cambridge and they're
Yep.
going to Google, home insurance in Cambridge or in
Yep.
Mississauga or in Toronto or anywhere in
Yep.
Vancouver,
Sure.
what should they do?
Yeah, usually what we find it's they usually start with who are mom and dad insured with, like, hey,
Good
who's
point.
who's your contact. But I would say as a new home buyer getting into the market, it's about what's important to you. So start with
Hmm.
mom and dad's insurer, but are you tech savvy like you and I are, Randy,
Oh yeah,
or
right.
are you
Yeah.
are you somebody that's more about relationship? You want to go in because it's your first home, and I would say with a first time home buyer, going that digital route might be a little difficult because it's really hard to understand insurance to begin with.
Hmm. It
And
is
when it's your
complicated.
first home, you want to
Yep.
make sure that if something happens, you're looked after. So I would certainly recommend talking to somebody, whether that's in person or whether it's a call center. Get on the phone and have somebody explain it because everybody's situation is different. So it could be two different couples buying the same exact home. Well, everybody's situation is different around what they might own and what's important to them and what are they going to store in the basement and
Mhm.
what's the maintenance schedule look like. So every situation is going to be different. So a good insurer will tailor the insurance to that specific individual and property.
Okay, interesting. Interesting. Okay, so again, we're just talking hypotheticals here,
Yeah,
right?
sure.
Let's say that hypothetical first-time buyer is buying a condominium. Okay, this is another
Yeah,
thing that I didn't know until I got into real estate,
sure.
that the maintenance fees in a condominium cover what we call building insurance.
Yeah,
However, that's not full coverage, but that is a substantial amount of coverage.
yep,
I'm going to ask you to explain it. I know with my
sure.
limited understanding, the building insurance covers things like the common areas, or if somebody slips and falls on the ice and breaks their
Yep.
leg, and they want to sue the condo corporation, that liability is covered. But what's the difference there? What exactly is the insurance, building insurance that goes with a condo, typically with a high rise condo?
Yeah, for sure. So we'll start. I'll just start quickly with a home and why it's different than a condo. So with a home, you own the building plus all your stuff inside it, and you're responsible for the liability. So as you mentioned, a slip and fall. Somebody slips and falls on your driveway, you're responsible. You're liable. With a condo corp, what you don't own the building. You kind of own almost the air and the space in your unit, right? So you don't own that building. So the condo corp is going to insure the building itself. Now, the issue with condos is every condo corp insurance policy is different. And what I mean by that is some policies will cover, okay, we're going to insure the unit to exactly what it was when you took over. So, it was carpet and the cupboards were kind of your standard cupboards, and that's what we're gonna replace if something happens. Other condo core policies might be we don't cover anything other than we're just gonna give you an empty unit and you got to put the flooring in and the kitchen cabinets. And the
Mm,
problem is trying to figure out what your condo corp insurance policy covers is
mm,
almost impossible. So one thing that we make sure we do, we always give them, which sounds funny because it's a condo, we always give them building coverage, which is that coverage for things like toilets and fixtures and kitchen cabinets, because you just don't know what that condo corp policy is going to cover. You just want to make sure you've got what you need should something happen.
Well, that's really interesting. Actually, I didn't know that. Okay, that's something that's
Yeah.
a new concept for me.
Yeah.
Um, I
Yeah.
had I had a client a couple of years ago in Mississauga in a high rise who suffered a flood
Yeah.
through no fault of their own. It was the guy above
Yep.
them.
Somebody above. Yeah.
Yeah, and their ceilings were all ruined and stained, and they had to replace drywall. And in one
Yeah.
room, they had to take out the hardwood floor because it was all warped, and it was just a
Yeah.
disaster. And they had to
Yeah.
fight. They had to fight with the condo corporation. I think
Yeah.
they eventually made an agreement where the condo corporation covered a portion of it, and
Yeah.
then their own. Fortunately, they had their own insurance policy for contents, which covered the rest. But so it
Yeah.
wasn't just an automatic thing. Well, don't worry about it. The condo will come in and they'll fix everything. It wasn't that. It took them months. It took them like 4 or 5 months to get it settled. And
Yeah.
so
Yeah.
it
It always is more difficult when there's a claim in a condo corp, because you now, instead of
yeah,
it just being you, one party, you've got three parties. In
right.
a situation like that, you've got the person above
Yep.
who, overflowed the bathtub.
Yep.
You have the condo corp that's probably responsible for a portion. So maybe the ceiling, we're fixing the drywall and maybe the flooring. And then there's the insured, the customer who's maybe, their couch was damaged and their stereo and their TV. So it does often take longer because we've got three parties instead of just one.
Right. So there's another
Yeah.
thing that I think a lot of people don't understand. If you're living in a condo, you do not have insurance on the contents of your furniture, usually, right? You're the guy here
Yeah, condo corp policy will not cover that. That's why you need
right.
your own policy. Correct.
Right. So if there's a theft, let's say, God forbid, you get broken into, or what about a fire?
Yeah.
If there's a fire in your
Yeah.
condo and it
Yeah.
burns a bunch of your furniture, a bunch of your stuff, that is not covered, is it, by the condo corporation insurance?
No,
Typically,
no,
typically,
no.
right?
Typically, no. Yeah.
Okay,
Typically,
so
I would say typically never that they're going to cover your contents.
yep. So these are things that like they're one in a million, right? But it can
Yeah.
happen. It has
Yeah.
happened, and it's
Sure.
something to consider. To
Yeah.
just backtrack for a second, though, to go back to when you're purchasing a property, is it fair
Mhm.
to say that you're not going to get the funds from the bank if it's a house or a semi-detached or a freehold property? You're not going to get those funds released until you can prove that you have an insurance policy in place. And also, yeah, are there any such restrictions for a condo? Does the bank require anything? Do they have to see the status certificate, or do they have to
Yeah.
review exactly what's covered, or do they just automatically release the funds?
Yeah. Great question. So let's start with a regular homeowner policy. So yeah,
Yeah.
they will not release the funds, and there's a couple things they want to see. They want to see when you have a policy in place. They want to see that they are listed as what we call an additional insured. So what that means is if there is a loss, that they are aware of it and they're also on the check, so that you don't have somebody skipping town taking all the money from the insurance company and the bank is left with nothing.
Wow.
So they want
Okay.
to make sure they're listed. It's usually called a confirmation of insurance or
Interesting.
declaration pages, which will show them the policy and that they're listed on it. But there's two things that they're typically going to want to see. One is what we call guaranteed replacement cost. So what that means is, let's say insurers will come up with a program, or okay, we think it's going to cost X amount to rebuild your home, which is different than what you paid. So especially with what real estate's done, say the last 5, 10 years,
Hmm.
we may say, okay, Randy, you know what? We think it's going to cost $620,000 to rebuild your home, but you bought it for 1.3 million, right? All we're concerned with as the insurer is what is the cost to rebuild it. But the bank wants to make sure, okay, we know you want to insure it for 620,000, Mr. Insurance Company, but if it costs 750 to rebuild, we want to make sure that you're on the hook. So that puts the insurer on the hook with guaranteed replacement cost, that we will build it exactly back to what it is, even if we're off on what our rebuild numbers are. So
Interesting.
that's one. If a policy does not have guaranteed replacement costs, and that may be a case with certain types of investment properties, what the bank wants to see is, so let's say you buy a property for $1 million and the mortgage is 750. They want to see that the building coverage is minimum $750,000, because again, they want to make sure that they're getting their money back out of that property should something happen.
The banks always cover themselves. That's for sure. That's
Oh,
that's
for sure.
rule number one.
Yes.
Yeah.
Oh, yeah.
There's one thing you said at the beginning when we started today that I disagree with you. You said that insurance is boring. No, it's not. No, it's not. It's honestly, it's really interesting. And when you get into it, there's all these
Yeah.
little nuances that come into play that most people don't even think about, and it's one of those things where, hopefully you'll never need it. But
Yeah,
if you do, you need to know exactly what's on your policy, what's covered and what isn't.
that's right.
Okay. So you mentioned something just now about investment properties. Is that
Yeah.
any different if someone, okay, they own a house and they say, you know what, we're going to buy a condo, it'll be our investment. We're
Mhm.
going to spend 600 on a condo and we're going to
Yeah.
rent it out and we're going to, we'll hold on. We're not going to flip it. We're going to keep it for a while. We're going to rent it. What sort of insurance policies are if it's a condo, do they need
Yeah.
to worry at all? Or if they're buying a cottage or a second house that
Yeah.
they're going to rent out? Are there any differences if the property is not a principal residence?
For sure. So we can start with, let's say it's a rental condo. So it's going to be a condo policy. So similar where, you're covering a portion of, say, the building that the condo corp won't cover. So maybe the kitchen cupboards, fixtures, etc. It's not going to cover contents unless you furnish it. So if you furnish, so let's say you rent it out furnished, then you can add that to the policy.
Mm,
But it's also include that liability piece. And what that liability piece is for, if your tenant does something
mm.
that causes damage to the condo building or a unit below, you want to make sure that you have liability coverage to cover that,
Okay,
right?
so
So
you're the owner, you've rented it, it's a
yeah,
high rise, you've rented it out, and your tenant, let's say they cause a flood somehow,
yeah,
and there's damage to the unit beneath them.
hmm,
There you need something in your insurance to cover you, so because the
correct.
so that the condo corporation doesn't come after you to pay for
That's
the
right.
repairs needed.
Yeah,
Interesting. Okay, so and that's a
yeah.
separate policy from what you get as the owner when you bought that condo. This is something else.
So
Uh,
it's
It's an
so
addition.
condo
Yeah.
I'm living in it policy,
Right.
condo I'm renting it policy.
Ah.
Very similar outside of that piece on the contents, where we're going to cover a portion of the building and there's going to be liability coverage.
Mhm.
So you do need, you want to make sure, the other thing you want to make sure, and we may talk about this later, is making sure that tenant has insurance.
Well, that's okay. That's a great segue.
Yeah.
A
Do we
lot
want to
of
go
it.
into that right now or?
Sure, sure. So
Okay.
a lot of investors, a lot of people who've
Yeah.
bought and sold a number of properties,
Yeah.
they require, if you see the listing that's up for
Yeah.
rent, it's going to
Yeah.
say tenant. We require that the tenant have contents insurance or insurance for their
Yeah.
property, and sometimes it spells out really specifically what the
Yeah.
tenants must get. Is that
Yeah.
a good idea? And what's a couple of examples of how that could work?
Yeah, so it's a great idea for a couple of reasons. Number one, to help protect that tenant, because often, like, they don't know. It's kind of like a first-time home buyer. They have no idea of what they need.
Mhm.
The landlord policy is not going to cover any of their contents. So number one, informing them that they need it, and this is why, because the landlord policy is not going to cover anything that they own inside that unit. Another big one is, let's there's a large loss. There's a fire. You mentioned, say, a fire in a condo. So let's say it's a condo.
It happens. It has
Um,
happened. Yep.
there's a fire. The tenants have to move out, or let's say they got to be put up in a hotel. That is actually not the landlord's responsibility to put them up.
Okay.
That's where the tenant insurance would come into play, or renter's insurance would come into play, where the tenant has their own insurance and their insurance company would then pay because they can't live in their unit, put them up in a hotel, and then maybe rent them another place while that unit is getting repaired.
Interesting.
So that's another reason. What the landlord policy covers you for is, if the tenants move out and aren't paying rent, the insurance company will pay you the lost rent. But we always get that confusion where there's a loss, and then the landlord's like, "Oh, well, I put them up in a hotel for a couple of days." It's like, you should have called us at time of loss, because that's actually their insurance company's responsibility.
And for
Yeah.
any renters who are listening in today, I don't think it's very expensive. Tenants
Hmm.
insurance on a yearly basis
Yeah.
is how much
Yeah.
ballpark? I won't hold you to it, but just a
Yeah, I mean,
ballpark
it
figure.
depends on the amount of your contents, but let's say somewhere between $200 and $500 a year.
That's it per
Yeah.
year, not per month,
Yeah.
per year. Yeah.
Per
So
year.
pretty good deal for peace of mind,
Yeah.
I think. Yeah.
Sure.
So, and you would recommend then if you're an investor or you've got an investment property to require
Yeah.
that from your
Yeah,
tenants.
and I'll give you one more reason, as if you're the owner of the property and the landlord, is the liability piece. So your insurance company is going to cover you for losses. So let's say the tenant accidentally knocks over a candle, causes a fire, and there's $150,000 in damage. Your insurance company is going to get you back to where you were, fix the home, pay out the $150,000. But what will happen on the back end is your insurance company may subrogate against that tenant's insurance, saying, okay, X insurance company, you're insured, your tenant here caused this damage. We're now coming after you for that money. And the reason as an investor that you want to make sure your tenant has insurance is that if your insurance company is able to subrogate and get all of that money back, well, now that claim that was $150,000 on your record might go down to zero or only 10,000 if you're able to get most of it back. And
Interesting.
if you're looking at buying more properties, the last thing you want is a bunch of large losses on your record.
So you guys, you're with Desjardins. Do
Yeah.
you only are you like a mortgage broker in real estate can work with all sorts of different companies? Do you work with Desjardins only, or can you work with any number of different insurance providers?
Yeah, so I'm what they call a captive agent. So I only work with Desjardins. So it's a little bit different in the sense that
Okay.
I can't go out to 5 or 10 different companies and
Right.
get different pricing. But what it gives the consumer is the ability to connect directly with the insurance company. So, especially if
Ah,
there's a claim and understanding of the policy. Very hard for a broker to understand every insurance company's policy. With us, it's only one that we need to know. It's
okay.
only one claims department. We know everybody in the claims, right? So we're able to, it's just in my mind, for a lot of people, it's a smoother process, not having to deal with multiple parties.
Right on, man. Right on. Okay, we're talking a little bit about investments, and you
Mm-hmm.
actually brought something we were talking earlier a couple of weeks
Yeah.
ago. Um, a lot of investors buy new condos, as you know, in the GTA. It's a big deal,
Yeah.
although it's cooled off a little bit right now, but it's going to come
Sure.
back, I think. And they buy pre-construction condos, so they're just being
Yeah.
built. They're paying a series of
Mm-hmm.
deposits. They don't actually own the property yet. The closing hasn't taken place. But many condo developers, especially today, will allow a period of what we call occupancy, where
Yeah.
the owner or the future owner, the owner to
Mm-hmm.
be, is allowed to rent out that property before they actually own it. So
Yeah.
they've got what they
Yeah.
call interim occupancy. How does
Yeah.
that is actually something I never really thought about, man. But
Yeah.
how does that
Yeah.
work? Because you don't own the property, you don't have an insurance policy on
That's
it,
right.
do you? So how does that work if you put a
Yeah.
tenant in there and there's some misadventure with a tenant during interim occupancy? Who covers that?
Yeah, so that's a unique one where you bought the unit, but yeah, you're not going to live in it. You're going to put a tenant in. But it's
Right.
I'll kind of touch on that. So yes, interim occupancy, which is weird. You've spent all this money and you're moving in, and your tenant's moving in, but you don't own it. So it kind of feels a bit weird. It's like, oh,
Yeah.
okay,
Right.
I bought this condo, but I'm a tenant. So what the condo corp is going to ask for, they're going to ask for a renter's insurance policy or a condo unit owner policy. They want to know that there's insurance on it, even though you technically don't own it yet.
Okay.
So depending on the insurance company, what some insurance companies will do is they'll say, okay, you don't own it yet. We're going to set you up with a renter's policy, even though you're going to move somebody else in there, to satisfy the condo corp. The
Okay.
issue with that is it because, as you know, with a condo closing, often the bank doesn't ask for insurance because it's a condo.
That's right.
So
That's
you
right.
run the risk as a condo unit owner that you still have a renter's policy 5 years into owning this thing because you forgot to call your insurance company, let them know you actually own it now. What we do and what other insurance companies sometimes do is we say, okay, we know it's interim occupancy, we know you don't technically own it, but that's what we're going to give you. We're going to give you a condo unit owner policy day one so that when it does eventually close, you have the right policy in place.
Yeah, that's really interesting. I'll bet you that the vast majority of people buying pre-construction have no idea about that. It doesn't even
Yeah,
cross their minds. So,
yeah.
very interesting. Because yeah, you want to protect yourself. You never know.
No,
And during interim occupancy, you don't own it, so there's got to
that's
be
right.
somebody left on the hook
Yeah.
if there's an accident of some kind.
Yeah, the
Okay, that
condo group is trying to cover themselves. They want to know that if you do something or you're renting it out, a tenant does something, that you have insurance, so it's not coming out of their pocket and their policy.
yeah, and stuff can happen.
Yeah,
I was just reminded of we had this big flood in the GTA in July, as I'm
yeah,
sure I don't know if you had it in Cambridge. You got a big river there with the Grand River. I don't know if you guys
yeah,
had flooding too. I love Cambridge, by the way.
yeah.
Um, but I know not so much in Mississauga where I am, but in parts of Mississauga and areas that I'm sure you're very familiar with, the Don Valley, Lakeshore
Yeah,
Boulevard, there was
Burlington.
tons of flooding. I have a good friend of
Yeah.
mine in Burlington whose basement got flooded. I've also been told by a few people that floods are not necessarily covered in a
Yeah.
standard home insurance policy, homeowners insurance policy. Is that true?
Yeah. Yeah. So I would say, 20 years ago, you're right. Wasn't even something that was available. If you had a flood in your basement,
A
20, 30 years, yeah,
natural
you
event.
were either on
Right.
your own, but there was also,
Yeah.
some government programs available, and the government's still working on different programs depending on where people live. But that's what you had to do. If there was what we call a natural flood,
Mm.
where water's coming in through your window wells and getting into your basement, you didn't have coverage. But about 10 years ago, insurance companies started to offer it on a homeowner's policy, but it's optional.
Okay. So it costs extra.
So,
Yeah.
unless you're working closely with your insurance company, you may still not have it. Unless they're calling you to say, hey, Randy, we've got this new coverage, which, if somebody has 3,000 households, there's a pretty good chance they're not calling everybody. You may not have it on your policy, but it is available. The only caveat to that is depending on where you live, it may not be available. So if you're in a floodplain, there's a good chance, even though your insurance company offers flood insurance, that you can't get it. But it's also, most insurance companies now will go down to the 6-digit postal code on the cost of that, the premium for flood insurance coverage. So what I mean by that is, I live in Kitchener, so on my street, so my flood insurance premium compared to somebody 3 doors down might be significantly different, because maybe my house sits a little lower and is more prone to flooding. Yeah. So in Toronto, yeah. So, we're seeing more of these. There was another big flood. I want to say it was maybe 3-4 years ago that happened in Toronto. And, hopefully those people have had a chance to speak with their insurance companies prior to that they have that coverage now, because it's not automatically added typically.
So I don't know. Maybe it's climate change. I have no idea, but we do seem to
Yeah.
be, you could say, well, it's a once in 50-year event, but I don't know. Like you said, just the other, couple of
We
years
just had
ago.
it it
Yeah.
was either 3 years or 4 years ago. So pretty much the exact same thing happened in Toronto. Yeah.
Yeah. I was talking
Yeah.
to somebody in Florida a little while back, and she was
Mm.
telling me that we always talk about, oh, the cost of living in the US is so much lower. We pay through the
Yeah.
roof here in Canada. We're paying
Yeah.
through the nose. And she was telling me that the living in Florida, the hurricane insurance that she has to pay on her
Yeah.
property, and they're on the Gulf Coast, is
Yeah.
just like through the roof.
Oh yeah.
I forget
Yeah.
exactly what she told me. I think it was like 600 a month or so, something
Yeah.
outrageously expensive for
Yes.
hurricane insurance. And
Yeah.
that's totally random, completely off topic, but I tend to do
Yeah.
that a lot.
But you're right.
So,
So that example there, that's 600 a month. So somebody that is in one of those areas that's prone to floods, maybe it's offered here in Ontario, but instead of it being $10 or $20 a month, it might be $200 a month for that. So a lot of people may say,
mm.
well, you know what? I'm just going to roll the dice. I'm not going to take it.
But once again, Todd, I go back to what you said in the beginning. I disagree, man. Totally. Insurance is interesting. It is.
And
And it's
there you
it's
go.
important. It really is. And we're
Yeah.
just talking about homeowners insurance here. You sent me a very interesting list of red
Yeah.
flags, what you call red
Yeah.
flags that insurance companies look at. Okay. And this is the sort of thing when you go in to get an insurance policy on your home. And there's a list, it's a 2-page list here, very
Yeah.
impressive. And if maybe could we go through some of those and maybe explain to the listeners
Yeah.
some of the things that, because a lot of people just don't have any idea of what would the insurance company be considering, like how do they come up with their numbers?
Yeah.
But there's stuff here. I mean, the first one, I don't know, what is it, about 20 or 15 or 20 things. First thing, the age of the roof, a very basic thing. We're talking about a house here.
Yeah.
That is important for sure. How is that? Tell us a little bit about this first red flag, the age of the
Yeah.
roof.
Yeah. So I'll maybe talk a little bit about the checklist, kind of why we create it, and then I'll touch on that if
Absolutely.
that's cool with you.
Sure, sure.
So yeah, we create this because, going back to the beginning, we typically are the last person that gets called. So this was sort of created for, whether it's our clients or give it to somebody like yourself that's maybe showing homes, so somebody can see this ahead of time, so that it's not like, oh, I'm closing today, I don't have insurance, and oh, geez, I've got one of these items here that the insurance company doesn't like. So that's kind of why we created it, was that, to help people so there weren't any surprises come closing day. But yeah, age of roof. If it's an old roof and it needs to be replaced,
Yep.
You might have a tough time finding somebody to insure it, or you get insurance, but it excludes any losses related to the roof. So, if you think of yourself as a consumer, okay, I'm going to spend 700,000 on a home, but if we got a big storm and a portion of my roof blows off and it rains inside the home, I'm on my own.
Mm.
Geez, I don't know if this is the property I want, or do I get the current homeowner to maybe fix it, or do I make sure that when I close, I've got somebody coming to put that new roof on,
Okay.
right after close.
So if you're a year or two into your policy and then you decide to put a new roof on the house, can you adjust that policy at that point? Say, hey, I just put a brand new roof on. Can we lower the price or lower the?
You can, or get the coverage back. But typically, what an insurance company will do is they'll say, okay, we will insure you, but we're going to include in relative to the roof, but we're going to give you 3 months, 6 months to do it. So it's not
Ah,
an indefinite thing where the insurance company
okay.
says, yeah, we'll just keep a roof exclusion on forever. It's okay. We realize you're closing. It's a new home. We'll put the
Okay.
exclusion on, but our expectation is, depending on the time of year, because obviously in January it's tough to get a roof done.
Hmm.
We'll give you X amount of time to get that roof either repaired or replaced.
Okay. There's another thing. I've been in the business 30 years. I didn't know that's how that
Yeah,
worked.
yeah,
Okay, water heater. Okay, water heater or water
yes,
tank. Most of them I think are rented, the vast majority, but some of them are owned.
for the most part. Yeah,
Yeah. And so how does that factor in?
yeah. So most of the rentals are what we call standard steel tanks. And they have a lifespan of about 10 years. After
Yeah.
year 12, they're prone to break down, burst.
Rust.
So
Yeah.
us as an insurer and a lot of other insurance companies will again exclude coverage for a hot water tank, if it's
Mhm.
over 12 years old. But if it's a rental, it's an easy fix. You call whoever you're renting it through. They
Mm.
realize that,
Yep.
hey, I can't get insurance because my water tank's too old. They just come and replace it.
Okay. Now you mentioned sump pumps. That's another thing that I'm seeing more and more. Actually, I was looking at some houses in Cambridge a couple years ago, and every
Yeah,
house there seemed to have a sump
yeah,
pump, which is
yeah,
great. In Toronto, some of them
yeah,
do. Mississauga, some of them do.
yeah.
Explain to the listeners because a lot of them might not even know what a sump pump is.
Oh yeah, yeah, and a
So what?
lot don't, because when we're asking clients, are like, sorry, so we have to explain exactly what it is. So a sump pump is basically it's going to be almost like a hole in your basement, like a pit. It's, I would say, maybe 24 inches in diameter, and it's
Yep.
got a pump in it that will pump out water that is typically coming in from the ground. So if you're in an area, you mentioned being in Cambridge, yeah, there are certain areas in Cambridge
Hmm.
that have a high water table. So it's actually mandated by the region or the city, depending on where you're building, that home has to have a sump pump in it. So what, again, it's designed to keep water out of the basement.
So there's a pipe that it pumps out through a
So
pipe,
especially if
like
you're looking at finishing your basement, you want to make sure it pumps it right out of the house. Yes, to help prevent water losses in your basement. And, more and more people are finishing their basements. 30, 40 years ago, it just wasn't something that got done. Whereas now a majority of people want that extra space and they're finishing that
yeah,
space.
absolutely. Okay, next one on your list, heating source. Okay, very interesting. Most are gas these
Yeah.
days, but there are older homes in the city of
Yeah.
Toronto. There's a lot of them still heated by oil. Some
Mm-hmm.
houses have electric heat. Again, we're talking about houses and freehold here
Yeah.
primarily.
Yeah.
Um, what's the deal on that? And I know buried oil tanks can be a big deal. There's still some
Yeah.
houses. I did
Yeah.
one a few years ago that was a luxury home in Lorne
Mm-hmm.
Park, actually in Gordon Woods, and it
Yeah.
had a buried oil tank that it was still there.
Yeah. Yeah.
So how do you work with that?
Yeah. So insurance companies do not love buried oil tanks,
No.
because the risk with oil tanks is the spill and the liability and the cost to clean that up. So, a lot of insurance companies, once they know it's buried, you're limited as to who will accept you. Number one, and you never want to be limited as a client as to where I can get insurance, right? So if there's a buried oil tank, it can typically be a problem. If you're looking at a property and you're in love with it, and say the oil tank is in the basement, you just need to get the specifics around it. How old is
Mm.
it? The manufacturer, is it single wall, double wall, like those type of things. You want to get all that information ahead of time, maybe even before you put the offer in, and talk to somebody and say, okay, this is what it has. Am I going to have a problem?
And the house I grew up in, my dad, it was just a small house, but it had an
Yeah,
oil heating, it had an oil tank in the basement.
yeah,
And eventually, finally, after many years of coaxing, My dad had it removed, and they put in a new furnace, gas furnace, and everything was great after that.
Yeah.
And
Yeah.
so it can be done, but there's still, again, in older neighborhoods, you can run into all sorts of
Oh
stuff.
yeah. My neighbor across the street, I live in an older neighborhood.
Mm.
She's the only one on the whole street, but she has an oil, a truck
Still
that
there
comes
once a
two or
year. Yeah, once or twice a year.
3 times a year and fills that tank up.
Amazing.
Yeah.
Amazing. Okay, so that's something a lot of people might realize. They might not realize that insurance companies would take a look at that. That's an important
Sure.
thing to think about. Okay, electrical. Okay, here's one that I have some experience on.
Sure.
The big one, aluminum wiring. Aluminum wiring
Yeah.
has been a big deal now. Um, as many people listening on this, or maybe you don't know, many would know, but many might not know. There was a controversy about aluminum wiring, which was very popular in the 1970s. There's entire neighborhoods that have aluminum wiring.
Sure.
Places like Clarkson in Mississauga is pretty well all aluminum wiring. But it was determined that that was a safety issue, and that especially the connectors on that wiring could heat
Yeah.
up and possibly catch fire. So a lot of
Yeah.
people retrofitted them with copper connectors.
Yeah.
But there's still houses out there that have aluminum wiring.
Yeah.
Today, that are 100% aluminum. A lot of people will tell you that if you're buying a house as a buyer, especially, there's a lot of insurance companies will not insure that house if it's strictly aluminum wiring. There's a few that will, but a lot of them
Yeah.
won't. Is that true?
It is. So it will limit again. It's going to limit who you can get insured with because some won't do it. We do it, but we have two different rates. We have
Ah,
an uninspected rate, and then we have an inspected rate if there was anything that needed to be fixed, or whether it's a copper connection, and then
mm,
that work has been done. So there's two different rates that we offer.
interesting.
But yeah, going back to, especially if it's your first home, aluminum wiring, you will be limited. You may exclude 50% of the insurance companies out there that won't touch it. So similar with knob and tube, which is, that
Ah,
goes way back. We're
it's
talking back in the 20s and 30s,
downtown
but there are
Toronto.
homes that have it. Yeah.
Absolutely. Yeah. That's another one.
Yeah.
Yeah.
And that one there, you're really limited. Like there's very few companies that will touch it.
Mm.
Some of the farm mutuals, but again, now you're limited and you're at the mercy of whatever rate they give you because you can't shop it around.
You're going to be paying a higher premium for sure. Right.
Yeah.
Okay. Plumbing. Oh, you've got Kitech plumbing in here. I was just dealing with something with Kitech plumbing. Okay,
Yeah.
for people listening in who are not aware, Kitech plumbing. Kitech is spelled Kitec. It's a brand name.
Yeah.
Back in, I believe it was around the mid 1990s,
90s.
it
Yeah.
became popular. It's a form of plastic plumbing.
Yeah.
Before that time, everything was usually copper or other metal plumbing. But it was approved, and it was approved by the United States government. It was approved by the Canadian government, and Kitech plumbing became very popular with builders, not just for condos, but for houses as well, to put this plastic plumbing in because it was cheaper. It's
Mhm.
easy to spot because it's bright orange if it's the hot pipe, and it's bright blue if
Yeah.
it's the cold water pipe. But then after a while, they found out that this plastic plumbing could explode, or it could degrade after
Yeah.
a period of years, and you'd have a flood. And by a flood, I mean not like a dripping pipe. If a Kitech pipe explodes, typically the hot one, I believe, not being a plumber, uh,
Yeah.
it's an instant flood. Like it's gushing. It just
Yeah.
explodes, and there's water everywhere. And I've had personal experience with this with my clients and others, and it's not good. So a lot of high rises, especially in this, and Kitech was popular from the mid 90s to about 2005. I think was when they finally stopped it.
Yeah.
There were lawsuits. There was a class action lawsuit in the US. I believe Kitech
Yeah.
is gone. I'm pretty sure they're out of business now because it was
Yeah.
hundreds of millions of dollars class action
Yeah.
lawsuit. But it wasn't the builder's fault. People say, "Oh, the builders put this cheap plumbing in."
Yeah.
No, it wasn't. They were told it's okay.
Yeah. It's safe. Yeah. And
Yeah,
it's
it's
going to
the
last.
yeah, exactly. And the governments were wrong, or the regulatory bodies were wrong in both the US and Canada. So today we do come across, I haven't seen too many in houses, but apparently they do exist. But
Yeah.
certainly there are many buildings
Yeah.
in the Square One area. I could list 6 or 8 of them, including some
Hmm.
very well-known ones that were built with Kitech plumbing. Now, there's a few condo corporations that mandated that the owners of those condos had to retrofit. They had to hire
Yeah.
a plumber, take out the plastic plumbing, retrofit it with copper pipes. And there's a few that mandated, but it's an expensive process. Just in a condo, it's $6,000 or $8,000 easy, depending on the property. A
Yeah.
house can be way more than that if it's
Sure.
all Kitech. So that does exist, and I have, again, some personal experience with that. Most condo corporations did not mandate it. They suggested it that any
Yeah.
owner should, and usually what they do is they'd hire a plumber that would work that building, so they get a bit of a discount. It's the same plumber doing the whole
Yeah.
building, and it's a
Yeah.
complicated process because in a high rise, you have to turn off the water for that stack. So if you're on the
Yeah.
30th floor, if you're unit 14, that whole strip, that whole stack of unit 14 has their water turned off. So it's not a simple process. And then
No.
they go in there and they have to cut the drywall and get behind. And this is for under the sinks and for, I
Yeah.
believe, the toilets and also
Yeah.
washing machines if there's an ensuite
Yeah.
laundry. So it's a big deal. Kitech is a lot of younger agents don't know about it. I don't know how that could be, but it's
Yeah.
an important issue. And I have found that properties that still have Kitech usually tend to sell a little less than ones that
Yeah.
have been retrofitted. But again, you've got an issue. If it's not been mandatory, you could buy a unit in a high rise that's been retrofitted with copper, but the guy above you might still be Kitech,
Yeah. That's
right? And
right.
there's the problem. That pipe could burst. It might not. A lot of them are
Yeah.
fine, but you never know, right? So how do you guys deal with that? And I'm
Yeah.
sorry for rambling on. I do that all
Yeah.
the time.
Of course, of course. So, again, I'm only going to speak to Desjardins. So we don't have an issue. It's not a case where we cannot insure it, but I
Okay,
can
good.
imagine there are some out there, some insurance companies that say, you know what, if it's Kitech plumbing, we won't do it. So if there was a loss, if something were to happen and burst, there would be coverage. But as you mentioned, Kitech homes sometimes go for a little bit less than one without. And if I'm going to spend all this money on a home, am I really going to sleep at night knowing that this could happen? Even though you have insurance, anytime you go through a claim, it's still a pain,
Oh yeah.
right? You've got, as you mentioned, firewalls opening, everything's wet, they're ripping out flooring. It's a disturbing process when you have to go through it. So to me as a consumer, you're right. Like, okay, maybe I do pay a little bit less and I have a plumber come in and replace it.
And you got to
You know?
get not just any plumber. You got to get someone
Yeah,
who's certified to do. You get a certificate after you've
yeah,
retrofitted. You get a
yeah,
nice certificate
yeah,
that you can keep to show when you sell that property. Yes, it had Kitech, but it's been retrofitted.
yeah,
So
yeah,
okay, so you guys don't have a problem. Desjardins will, but you may end up paying a little more,
yeah.
or maybe the cost of the real estate itself. If it's
That's
got
right.
Kitech, there might
Yeah,
be a little bit lower price on that because of that. And that's
yeah,
one of those things that you'd think it'd be a huge issue, but a lot of agents just gloss over it, especially with high rises. And
yeah,
that's where the biggest liability is because, again, it's not just your unit, it could be the guy
yeah.
above you or two above you or three above you. You never know.
Right. Yeah.
Okay. Okay. Beautiful. Anything else about plumbing? I saw a house once in West
Yeah.
Toronto where the pipes were wrapped in horsehair, like from a horse's
Okay. Yeah.
tail.
Yeah. Yeah. Yeah.
I couldn't believe it. I have to ask the guy, what is that? He said, oh, it's horsehair
Yeah.
wrapped around the pipes. What? What is that?
Yeah,
What's that?
that
I'm
was the
like,
insulation that they used. So I can't remember. I had an old house in Toronto too. I can't remember if it was my house in Toronto or when we bought our house in Kitchener. That was our insulation in the walls, horsehair.
in the walls. Hey,
Yeah, yeah,
kept the horses warm, I guess, right? That's kind of
yeah,
cool,
yeah,
actually.
yeah. But when you're talking about pipes being wrapped, another thing is asbestos. So that's something I had in my
Ah,
first home in Toronto.
okay.
So that can be an issue too, where some
Yeah.
insurers, you know, don't like it. Depending on where it is, because asbestos was in everything. Tile flooring. It was in, like siding for homes, wrapping, used as an insulation to wrap pipes for a boiler. Like it was everywhere. And, if you are looking at buying a home, you can't touch this stuff. You need to get a professional in
Absolutely.
to replace it. So that's just an added cost
Yeah.
that if I'm looking at buying a home, oh
No.
geez, I got to get
You
a professional in here
if
to remove all this.
if you're getting that removed, they're going to be there pretty much in hazmat suits to take out that
Mm-hmm.
it
Oh,
causes
100%.
cancer. You don't want to touch anything to do with
No,
asbestos. Yeah.
no, no.
And then there's another one. When I first started in real estate, UFI was a big deal, urea
Yeah,
formaldehyde,
yeah,
which was another government mandated program
yeah,
that was very popular also in the 70s, where you basically would drill a hole in the side of your house and insulate the house with a foam. It's a type of foam that they would blow into the house, and which was
yeah,
apparently very effective, very efficient.
yeah,
But then they found
yeah,
out later that it caused cancer.
yeah,
So UFI became a big deal. Again, I started in '93 in the industry. And
yeah,
that was a big deal back then. It seems to have kind of faded away. I think most houses have had it removed. And
Yeah.
a good home inspector will be able to tell you whether
That's right.
they know
Yeah.
exactly what to look for.
Yeah.
But that was another deal.
Yeah.
Again, it really wasn't the fault of the homeowners. This was a government. I think they got tax breaks or something like that. Insulate your
Yeah.
house with urea
Yeah.
formaldehyde, and we'll give you a break on your taxes. So a lot of people
Yeah.
did it. But here we
Oops.
are. Yeah, right.
Yeah. Yeah.
Thanks,
And I'll just
government.
touch on, you mentioned a good home inspection. Like, when I'm buying a home, yeah, I want to, because I want to know what's wrong and what does my maintenance schedule look like. But the other great thing about that home inspection is, hey, here, insurance company, here you go. Here's most of what you need. It's right there. We love home inspections because basically 99% of what we need to do a quote is in that report.
It's great to know. That
So
is
that's
great to
another great
you
reason
know.
to do it.
Here's another reason why we did talk about the market, but the market has obviously changed over the past 2 years.
Sure.
It's slowed down a lot. And
Sure.
I have some friends in the industry who are home inspectors, and they went through a tough time when the market was on fire
Oh
because
yeah.
pretty well every offer on every property there was a bidding war, and
Yeah.
there were no conditions. There were no
Right.
unless the homeowner, the seller, did a inspection that they
Yeah.
could show to prospective buyers. That kind of fell by the wayside. People say, well, we'll do without the inspection. We'll do without the condition on finance. We're just buying. We're going in
Yeah.
cash. And that was a
Yeah.
reckless time, I think,
Right.
a reckless time back before 2022.
Oh yeah.
Now that the market's cooled off a bit, we're back to conditions on offers, condition on finance, condition
Yeah.
on inspection, and I think that's a great thing. I am a firm believer
Oh,
on house
100%.
inspectors. Like they know what they're doing. These guys are
Yeah.
experts, and they will find stuff that nobody else will find.
Yeah.
So yeah, I'm with you on that for sure. Okay, so that's UV was another thing that is sort of
Yeah.
come and gone, but it is still out there. I think there's probably
Yeah.
still a few houses that have it.
Yeah.
Now, on your list of red flag things to look for, one of them is the foundation.
Yeah.
Depending on the age of the home, is the foundation poured concrete or block? I've also seen
Yeah.
where it's just stones on some really old
Yeah.
houses.
Oh yeah.
So how does that affect your
Yeah.
insurance policy?
Yeah, so we talk about we talked about flood earlier and seepage, which is often kind of included with that. So seepage is, I don't know, I got water coming in somewhere in my basement. I don't know where. So if you think about the construction of a home, if you think about poured concrete versus block versus a stone foundation, which is basically mortar and stone,
Yep.
where's the water most likely to get through? Number one is the stone, then the block, and then hopefully it doesn't make its way through concrete. So it may, depending on the type of foundation you have, you may not be able to get certain coverages. So maybe you can't get seepage or flood, or you can, but the premium is significantly higher because
Mm.
the opportunity for loss is higher for, say, a stone foundation versus poured concrete.
Well, that's
Yeah.
another factor to consider. I mean, obviously, newer houses have newer technology. They've got newer building techniques.
Yeah.
But some people like historic homes. Some people like older
I know. I'm
neighborhoods.
a, I'm a sucker too.
Man, I look at these new subdivisions where everything is
Yeah.
just jammed together, and give me an
Yeah.
older house any day with a 50-foot
Yeah.
lot,
Yeah.
and a decent yard where you're not looking in your neighbor's kitchen.
Yeah.
Give me that anytime. But
Yeah.
these are
I'll deal
all,
with the headaches that come with it,
yeah,
right?
exactly.
Yeah.
As long as it's draining, as long as it's not
Mm.
draining into the house,
Yeah.
that. But
Yeah.
interesting, interesting. Now, on here, I'm just reading again on your list: wood stove or masonry fireplace. Typically not an issue, right? An inspection
What's
may
the only
be
thing with a wood stove? Like, wood stove to me is that standalone, call it pot belly stove.
okay.
Sometimes an insurance company will require wet certification, either before or they may come in and do it after the fact. But just be prepared that that might be something you have to provide.
Okay. Now, mortgagee, we're getting through this list here.
Yeah.
Mortgagee, okay. If there are multiple lenders or non-traditional lenders, insurance companies are typically, they're going to want to know the reason why, and may make it difficult to find an insurer to take on the risk. That's
Yeah.
interesting. Why would an
Yeah.
insurance company care about who the lending company is, or if there's more than
Yeah.
one?
Yeah, great question. So a lot of factors go into home insurance. One of them is credit, right? So typically a
Okay.
home insurance company, if you agree, is going to run your credit. But when we've got multiple mortgages, it's okay. We want to know what's going on. Why are there multiple mortgages? And if we look at your typical kind of digital call center type insurance company, most of those won't touch something that has more than one mortgage. They're only going to do a single mortgage. If you've got, let's
I'm making
say, and I'll give
notes,
us,
Todd. I'm making
yeah,
notes here. Honestly, I'm
yeah,
making notes.
yeah.
Okay. Carry on. Sorry.
And another situation, let's say you're working with somebody that's recently divorced. So often we run into maybe credit issues, et cetera, where their mortgage is Bob and Sally Smith. It's not, RBC or CIBC. You can run into issues there where some insurance companies won't do it, or they're just going to ask a lot of questions around, okay, why are we going this route versus a traditional bank? So that's one thing there. If you multiple mortgages and sort of a non-traditional institution, you're going to limit the amount of people that will look at insuring you.
So an insurance company is not just looking at the property itself. They are also going to look at the
They're looking
financials
at you
behind
as
it.
an individual.
Gotcha. Okay.
Yeah. How are you as a risk?
Okay. The year built, obviously, a newer home is going to be probably easier to insure than one that's 100 years old.
Typically, yeah, it's going to be a lower premium as well, typically.
What happens in a situation? This is sort of again random here, kind of off topic.
Yeah.
My office is in Streetsville, where there's a lot of designated properties. A lot entire blocks of the downtown part of Streetsville are
Yeah.
designated
Heritage homes. Yeah.
heritage homes where they can't touch them, they can't fix them.
Yeah.
Well, they could fix them, but they can't make changes. And so, how does that affect someone who buys a heritage home? Is that a bad idea to buy a heritage home?
Yeah, I mean, again, you talked about it. It limits you. So, for instance, if you want, more efficient windows, well,
Right,
you may not be able to do that because you have to put in, wood frame windows that look exactly like they would have in 1880. So it
right,
limits what you're able to do. Now, when we talk about the insurance side of things, because of that, a lot of insurance companies won't touch heritage homes because it limits us as the insurer to get you back to where you need to be,
right.
because there's just that one extra layer of kind of okays, check the boxes, that what we're doing is going to satisfy that what's considered a heritage home. So we don't insure them anymore. And again, you're going to be limited. If
Interesting.
you're okay with that, if you're buying a heritage home, typically they're not cheap. So if you're okay with a higher insurance premium as a result of buying a heritage home, then so be it.
I think they went a little overboard in Streetsville,
Yeah.
where
And
entire city blocks are now heritage, and I don't
yeah,
even know if they looked at the houses. They just okay,
yeah,
that's
I
that
wouldn't
block.
want my property being designated as heritage.
No, no,
No,
people think
no,
that's great. No, it's not. You can't make any
no,
changes.
no.
Okay. Last but not least on this amazing list here, which I'm going to try to share with our listeners, is the square footage of the property. Now,
Yeah.
if the home is very large, over 4,000 square feet, there may be fewer companies that will insure that type of a luxury home. Now, that's an interesting point.
Yeah.
I'd also happen to know that with condos, if it's a super small condo, there's problems with mortgages. Like if it's under, I think it's 450 square feet, it's very difficult to get a mortgage. I
Oh,
don't know
really?
why. Apparently, that's what I've been
Is that
told.
because it's maybe tough to sell? Yeah,
No,
that's
no
interesting.
idea, but I've been told that by a couple of lenders under
Hmm.
450. So, but let's say somebody wants to, they're doing really well. They want to buy a big
Yeah.
5,000 square foot house up in Caledon. Okay.
Yeah.
Out in the
Yeah.
country, are they going to have trouble getting insurance for that property?
So they're probably not going to have trouble, but again, they're going to be limited with who will look at it. So
Okay.
we have limits, and I won't share exactly what our limits are today, but insurance companies have limits of a rebuild amount that a company is comfortable with insuring.
Okay.
So when you get into some of these real higher end homes, let's say it's a $12 million rebuild, you're going to
Right.
be very limited with the amount of insurance companies that will look at insuring you. But if you're buying a $12 million rebuild home, you're probably okay going with a specialty provider like a Chubb that specializes in that type of insurance.
What's a Chubb? Explain what is a Chubb.
So yeah, so Chubb is they're a worldwide insurance company, and they are known, at least here in this market, in Ontario and Canada, as a specialty high end insurer.
Okay, perfect. So if you're
Yeah,
Drake and you're living on the bridle path in Toronto, you're probably going to insure your house with a Chubb,
yeah,
probably.
he's probably not with Desjardins. Yeah.
And he just had a flood too. There you go.
Yeah.
So
Oh yeah, I saw
yeah,
that. Yeah, I got
yeah,
copied on a couple of memes on that.
man, unbelievable.
Yeah.
Well, you
Yeah.
know what, Todd, this has been great. This has been a great talk. And I go back and say it the third time now, this is not boring. This is actually really interesting for anybody who's into property. If you're buying, especially, these are all
Yeah.
considerations to take into consideration. And man, there's so many things to weigh, whether it's high tech plumbing or whether it's a heritage house or all these various things, or if it's a brand new condo and it's interim
Yeah,
occupancy, there's all these things to consider. But I do appreciate our talk today. I found it fun. It's great. You're a wealth of knowledge, man. You really are.
I
So,
appreciate having me on, Randy.
oh, my pleasure. I'm going to put your contact information underneath the video and
Great.
also on the podcast. So, and I urge people listening today that if they need home insurance of any type, that they reach out to Todd, and I know they will be in good hands with you, man. I couldn't stump you, that's for sure. You could stump me a lot of times, but it was a great talk. You're welcome to come back anytime, anytime.
All right. Appreciate it, Randy.
All right, thank you, sir. Todd O'Donnell. It's been great talking to you, and you have a great afternoon. And we'll talk again soon.